What happened is that I've restarted lecture 3 last week, so we'll just continue with quite a number of things actually. The concept, this is what I've covered last week, the concept of hidden tax. So just a bit of recap. I told you that, right, in Malaysia, in fact, the very first example that we've heard about hidden tax is about the monthly tax deduction. For those employees, right, with any employment income, we won't get 100% of the salary at the end of the month if we have earned, like for example, 3,800 monthly salary per month and above. So what happens, our employer is required to deduct a certain portion of our salary to help us to pay tax in advance. So that is actually one example of withholding tax. And then I've covered, in Malaysia, basically withholding tax is applicable to service income and also rental of rental of movable properties. And we do have other other example here of tax transactions that may trigger withholding tax if the recipient of the income is a non-resident, non-tax resident. So these are the 4 topics that I need to cover. So I've covered interest and royalty together with the questions on the derivation of interest and royalty income. And then today I will cover contract payment and also special classes of income. So these are some other examples of income earned by non-resident that will be subjected to withholding tax here, but it's out of scope, out of our exam scope. I do not want to cover so many of them. There's too many of them. So I just choose a few that I think relevant to our syllabus. So I just cover this one. This few are very important. So in terms of interest, I already covered. So I mentioned, the few things that you have to know is number 1, what is interest income and how it is being derived, and then so on and so forth. And then after that, the next question we have to answer is whether the recipient of the interest income, right, is actually a non-resident or not. If it's a non-resident, withholding tax will come into the picture. So in terms of derivation, section 15, in terms of withholding income coming into the picture or not, we look at the recipient, whether the recipient is a non-resident or not. If yes, then we look at the double taxation agreement to find out exactly what would be the tax rate. So for interest, is a final tax rate 10%. That means in this case, for example, Ali will have to pay 90% royalty to Nicholas, and then 10% will be given to LHD and our Inland Revenue here. And this 10% is considered as final, meaning to say that Nicholas need not to come to Malaysia and file income tax anymore. Okay, this amount is final. No more further adjustment, that's all. Very straightforward. So I already explained to you, in the event if the double taxation agreement, the percentage is different from our Income Tax Act Schedule 1 Part 2. That is where we get the tax rate for our income tax rates here in our legislation. So we compare these two, and of course we will take the DTA as our benchmark. If the DTA is lower, then it's a good news. If it's higher, then it's bad news. That's simple. Okay, very straightforward. So same thing happened to interest income. I already covered that. So we start with the derivation, and then we look at whether the recipient is a non-resident, and so on and so forth. Same steps, exactly the same. It's just that the derivation section for interest and royalty is slightly different. Because for royalty, we just need to cover 15A, B1, and also C, that's all. For interest, we need another one more, which is B2. Okay, it's very straightforward. I've covered this extensively. So I'll move on. Okay, I've also demonstrated to you in the event, this kind of situation. For example, the collateral is not used, the collateral used is not located in Malaysia, and also there's no income in Malaysia here, and very straightforward. Okay, in that case, the interest earned by this particular bank here is actually not subjected to any withholding tax here, so it's very straightforward. Okay, let's move on. Okay, and then I've also covered some penalty issues as well in the event if non-compliance, then what happens? I think I've mentioned somewhere here. Check that penalty provision here. So as you can see from here, like very straightforward. Number 1, non-compliance, there will be penalty, and then the tax office will penalize from the perspective of incorrect return, late payment, so on and so forth. Okay. So the most important thing is you understand the derivation and also how the mechanism works here. Not very difficult. Okay, we move on to something more challenging, which is special classes of income. So special classes of income is actually under section 4 capital A, as I said. Let me show you the app now. By the way, just to remind you, the link to buy the textbook will be expired by today, end of today. So if you want to get the textbook, you better do it now. So once they have collected the order from us, then they will disperse it. How they disperse, I'm not too sure about that. Okay, let's look at the end. So all this while, when you do your MTS, right, we have covered all the way until here. 4A, 4B, 4C, all the way to 4F here. This is what we call the classes. This is what I call them a normal classes of income. So as you can see, 4A all the way to 4E, right, you have the specific items over here. 4F is etc. Dan lain-lain. Okay, dan berbagainya. Problem is, as I recall, I don't think tax office have succeeded many cases by using 4F income here. They tried a lot using 4F income to charge the taxpayer. Taxpayer challenged the tax office, went to the court. Judges already decided that it's not right for the tax office to use 4F income, put it this way. Because to maintain fairness, to ensure fairness and equity in our tax system, right? Tax system must be as clear as possible. Cannot let the tax office to simply say, oh, this one I tax you under 4F. Okay, berbagai, dan lain-lain, etc. No. Okay, that will be against the spirit of fairness in our tax system. That's why very seldom tax office will succeed if they use 4F to tax the taxpayer. Okay, so that's why they will try their very best to do all this under A, B, all the way to E. If not, what else? Okay, now they have created 4A as usual. So 4A, 4 capital A is called the special classes of income. So it's very long-winded. We have 4A1, 4A2, 4A3, right? Long-winded, very difficult to understand, no problem. I summarized that nicely for you already in this diagram. One shot, I'll give you, okay? So now obviously you cannot bring this into your exam hall after that. Now, for this one here, basically 4 capital A income, right? Okay, we are dealing with non-resident. Like what I mentioned to you just now. Okay, for a bank, okay, receive interest from Malaysia taxpayer here. Okay, so we have someone over here pay interest to a bank located outside of Malaysia. It's a business income, but cannot tax in Malaysia under Section 12 because there's no operation here in Malaysia. So then they will try Section 4C. Okay, if too bad they can't, right? Okay, then too bad they cannot tax this interest income in the accounts of the bank at all. We also have similar things like service income. Service income is a big issue here. Service income, okay, very simple. What happened, especially now, a lot of things can be done online. Okay, what if we have subscribed to certain services? Okay, we use the service over here, but doesn't mean that the service has been rendered or performed here. So it can be performed over the internet. Like for example, you want some legal advice. You are here, but you call your lawyer in Hong Kong, for example, or Singapore, to get their advice. My question to you would be right exactly where the services have been rendered over the internet. So in that case, exactly which tax jurisdiction will have the taxing right. So that becomes an issue because obviously, we use the legal service over here, okay, for issues pertaining to something happening in Malaysia. But too bad, the lawyers are actually located somewhere else. They didn't come to Malaysia at all. Okay, in that case, can the tax authority tax on this service charge or not? The service charge received, or service fee received by the lawyers, right? They're income in nature. Business incomes are more. But are the lawyers having any operation or place of business in Malaysia? Don't have. So can it be taxed or not? Difficult. So therefore, they come up with this Section 4 capital A here to deal with all this. Services, for example, okay, use of property, intangible assets, example, installation, operation of plant, machinery, apparatus purchased from non-resident. So some of these factories, they buy machines from overseas, and then they need consultants to help them to sort of like to teach them how to operate the machine here in Malaysia. So the machine came from overseas, okay, then imported to Malaysia, installed here in Malaysia, and then this particular buyer in Malaysia, they also get someone from overseas, the manufacturer from overseas, right, to come to Malaysia to help them to do installation. And of course, the manufacturer from overseas, they will charge. So that would be considered service income. Subject to tax or not? Now, we have to see the derivation of Section 4 capital A, special classes of income. And also we have more specific, more special services here, like for example, okay, this one is something to do with consultancy, management or administration of scientific, industrial, commercial undertaking, venture, project, or scheme. Basically everything here. Okay, including, now those days we have this argument saying that, right, management or administration or scientific, industrial, commercial. Now, what kind of, so those days we have this argument, the tax office say that, okay, if you get someone, okay, to help you on accounting issues, for example, from overseas, right? It should be under section 4 capital A2 here. But those days, what happened was in this, let me show you the act. I think the act is clear. Here. Amounts paid in consideration of any advice given or assistance or services rendered in connection to all these things I mentioned just now, right? Previously, the tax office, when they drafted this one, right, they put in one more, there was one more word here. Amounts paid in consideration of any technical advice. The word technical becomes an issue. Because if I've engaged a lawyer or accountant to help me, okay, but this lawyer or accountant, right, located outside of Malaysia, they won't come to Malaysia, then the question would be, right, would it be under section 4 capital A2 special class of income or not? Tax office say yes, but taxpayer say no. That becomes an issue. Then ultimately what happened? Tax office removed the word technical. That's it. Whether it's legal, accounting, medical, whatever things, right? Okay, as long as service rendered. Okay, and you get the advice. So they remove technical, the word technical there. So it becomes anything goes now. Okay, that eventually becomes an issue as well, if you ask me. But never mind, we'll deal with this later on. Another one more special class of income is 4A3, rental, use of movable property. What is use of movable property? That means those properties that you have rented that is actually that can move around. It's not the fixed property or immovable property. That means rental or premise, right? It's not under this one. But let's say if you operate a construction company over here, you need a crane. Okay, your project located in Singapore. So what happens is that you rented from a Singapore company, okay, a crane. So the Singapore company come to Malaysia here, set up the crane for you. It's a movable asset. Put this way, a movable machine here or equipment here in Malaysia. So in that case, right, you're paying the rental, isn't it? This rental is actually rental for movable property paid to a non-resident because the contractor came from Singapore. So this particular amount of rental income, right, will be subjected to income tax here. In fact, under withholding tax. Withholding tax, that means when the contractor over here in Malaysia paid, okay, the Singapore non-resident to come to Malaysia to install this crane, okay, and use the crane to pay the rental, right? This rental will be subjected to withholding tax because the payment is made to a non-resident in Singapore. But this one is actually a bit problematic. We always make fun of it. Yeah, if you talk to tax lawyers, they will actually make fun of this. Very simple. If you go to London, for example, so one fine day, right, you go to London for your overseas assignment or something like that, or maybe you go there for your holidays. Okay, so London, you know London cab is very famous, right? So you hop onto a cab and then you use this particular cab, and of course you have to pay the fee, isn't it? The fare, the taxi fare, correct or not? Okay, so don't you think that this amount of taxi fare that you have paid to the taxi driver is a form of rental of movable property? Yes or no? Yes, right? Yes, of course. It's a rental for movable property. The taxi fare you pay to the London cab driver. Simple. Questions. Are you going to tell the cab driver and tell him that, sorry, I'm going to take 10% from this fare here and help you pay tax in Malaysia? Because you are resident. London cab driver, non-resident. You are paying a rental for movable property. You get what I mean or not? So can you tell the cab driver, taxi driver, I'm going to take out 15% according to our double taxation agreement with Malaysia here, right, between UK and Malaysia, I'm supposed to take 15% out of the fare. So you get only 85%. Don't worry, I will help you pay tax back in my country. You try that, see whether you can get out of taxi or not. Yeah. So this is actually something very silly in our tax legislation here. Why? Because they have not provided, very simple thing. Where exactly the movable property will be used, again, in order for the fare or the rental to be subject to tax. It is not, okay, the same with section 4A2 and 4A1 up there. Because for 4A1 and A2, right, services rendered in Malaysia, yes, subject to tax. Rendered outside of Malaysia, tax exempted. But for the rental of mobile property, right, they don't care whether the taxi is used here or used in other countries, So they didn't provide that particular provision in our tax legislation, which I will show you later on. Okay. So here, these are the few classes of income, special classes of income. I call them special. It's not me actually. The law calls it special classes of income because it's a 4 capital A income, not the normal section 4 income anymore. Okay. Let's look at it now. So of course, when it comes to special classes of income, that means the derivation section will be different as well. You can't use the normal section 12. you can't use the normal section 15 anymore. We use a section called section 15A. So it's something new again. Okay, so withholding tax on gross amount of fee or rental paid to payee at the rate prescribed by DTA. Okay, or we look at our income tax law. Okay, and this is also a final tax here. So the derivation section for section 4 capital A here is this one. Okay, so what would be the condition to say that the special classes of income is actually considered earned in Malaysia? Very similar to what you have learned in royalty. Number one, paid by government or state government. Same thing, 15A, 15 small a. And then we have paid by tax resident, 15B1, very similar. Okay, and another one is payment is an expense deductible against payers' business income derived in Malaysia. Same thing. It's almost the same. Okay, I would say 99% or 95% the same already. But they also have income tax exemption order 2017 here, section 4 capital A income exempted from withholding tax if services rendered and performed outside of Malaysia. And this is very important. Okay, at one point, tax office refused to give any exemption. They said, we don't care as long as we have a tax resident in Malaysia paying a non-resident outside of Malaysia. Okay, if that particular amount is actually a section 4 capital A income, whether it's subsection 8, 1, 2, or 3, doesn't matter, must be subject to tax in Malaysia. But this is not fair because other countries actually make noise. They say no, service have been rendered in other countries, not in Malaysia, so Malaysia has got no taxing right on that. Okay, because Malaysia has already signed this convention, this treaty with so many countries, right? So not fair for Malaysia to tax that. Okay, because this special class of income is very similar to business income. We've got another article in the DTA called article of business income. When it comes to business income, right, it's very clear cut. Only those business income earned in Malaysia will be subject to tax in Malaysia. So same thing, service income is actually a form of business income as well in the hands of the recipient. So in that case, right, okay, this particular service income will be deemed as earned in Malaysia only if you have place of business or any operation in Malaysia, then subject to tax, no problem. But when services rendered outside of Malaysia, right, not fair for the tax authority to tax. Okay, for Malaysian tax authority to tax it. So that's why, back in 2017, under pressure, they came up with this particular exemption order. Okay, it was actually a long story, this one. I know the whole story because I started teaching this subject quite some time ago. Okay, so let's use a very simple example here. So something to do with the advisory fee. Okay, we have Ali Berhad here engaged Nicholas, France company, Malaysian company, to advise on how to improve production efficiency. So something to do with management advisory services. Okay, consultant, no problem. It's okay for us to actually engage consultant from overseas to help us to improve our production efficiency. So in this case here, what happened is Nicholas sent a team of 3 engineers to Malaysia to give advice for 3 weeks. So the 3 engineers from Nicholas, right, came to Malaysia, stayed here, and provided the services over here. And then Ali Berhad required to pay advisory fee to Nicholas. So in this case here, what would be the income tax implication? Withholding tax will come in under the section 109 capital B. In this case here, very simple. Service rendered in Malaysia and payer in resident. Tax rate is final 10% or our tax law says 10%. So exactly under which article can we use in our double taxation agreement, right, to deal with this one here? Now, let me show you the double taxation agreement. And you understand how to use it. The double taxation bonus agreement. Okay, look for this particular article. This is the one, Article 12, capital A. It is called the fees for technical services. That is why previously, in our section 4, capital A, right, they put in technical advice there. It was because of the double taxation agreement. Then our tax office played cheating, they removed the word technical, but they're still using this article. When we look at the tax rate, because whether it's legal or accounting or whatever, right, whether it's technical or not, right, it depends on the profession. If you ask an accountant, right, something to do with IFRS, they will tell you that it's technical. You ask a lawyer, okay, about contract law, they will tell that it's very technical. So like it or not, right, it falls under the technical service fee article here. Okay, this article here. So how do we know the tax rate? Okay, this one here, very simple. This one, not exceeding 10%. This is exactly where we get it. So we have got a non-resident in France, okay, provided some service, okay, something to do with technical advisory to improve production efficiency, right, to a Malaysian resident here. Okay, so in that case, what happened? If you look at section 15 capital A, we have a match there. The payer is a tax resident in Malaysia. Back to this one. Okay, Ali Burhan is a tax resident in Malaysia, so therefore, this particular fee should be subjected to withholding tax here and no more than 10%. That's exactly what I mentioned just now. Okay, so it falls under this one. Payment by a tax resident. And high possibility, I think Ali will also claim a deduction of this management fee rate against income earned in Malaysia. If the management fee is to help to improve production efficiency, that means wholly and exclusively incurred in the production of income. That's simple. So this is a very straightforward case if you ask me. Okay, anything you don't understand, ask me now. So, yeah. Ali is claiming the deduction because the fee is an expense in the accounts of Ali. Income is actually Nicholas. Nicholas is the one paying the tax, suppose. But Nicholas won't come to Malaysia to pay tax. So to force Nicholas to pay tax, right, they force Ali. Ali will claim a deduction. So they are using some kind of matching principle here. If Ali is claiming, that particular amount as an expense, on the other hand, it should be income taxable in Malaysia. So they're using the matching principle here. That is 15 capital A, number 3. So they always use the matching principle. They say, oh, okay, since the Malaysian entity here is claiming deduction, so they enjoy reduction in tax, isn't it? So therefore, that amount should be subject to tax in the accounts of the recipient. In this case here, Nicholas. To be fair, but they cannot force Nicholas to come to Malaysia to pay tax, right? They force Ali Burhan to help to collect the tax. Okay, that's exactly what happened. Clear cut, right? This one I think is not very difficult. Okay, let's move on. This one here. Now, this one here, 100% advisory fee to be paid to Nicholas. What would be the difference? Ali Burhan engaged Nicholas for advice on how to improve production efficiency. Ali Burhan then sent 3 engineers to France. So the 3 engineers are there in France, right? Okay, to learn from the consultant. So where exactly the advice has been carried out is over here in France, and therefore, what happened then? Withholding tax will not come into the picture. Why? Because of the exemption order. The exemption order says that, right, if services have been rented outside of Malaysia, that's it. Okay, withholding tax cannot come into the picture. That means in the accounts of Nicholas, right, this service income is tax-free, exempted. Okay, taxable but exempted now. Okay, so that's why the question is always, what about if they provided the advice, right, over internet, MS Teams, 3 days or 3 weeks of, MS Teams meeting to teach the engineers over here. Okay, so our country has adopted that if, okay, the engineering team from Nicholas, they will come to Malaysia, right, no physical presence in Malaysia, right, services rendered outside of Malaysia, which I think is fair. Okay, that's why make good use of the technology. Okay, unless the 3 engineers from France must come to Malaysia and to oversee the entire process, to help to fine-tune, to help to actually redesign the workplace and things like that, production line and things like that, right? So these 3 engineers from Nicholas need not to come to Malaysia. Okay? Or the other way around, Nicholas sent their team of engineers go to France and learn the skills. Okay, so in this case here, 100% because of exemption order granted. Okay, so very straightforward one. So this no problem. Next, this one is a bit different. I've changed this particular country here. Nicholas is no longer a French company. It becomes an Australian company now. So what happened then? We've got this Australian company here. So when it's an Australian company, then we will look at the double taxation agreement between Malaysia and Australia, not okay, the DTA between France and Malaysia anymore. So if you look at this one here, okay, this one here, we've got the article for technical service, article fee for technical services over here. Okay, now if you look at so we look at another document here. DTA between Malaysia and Australia. Looks the same, but quite a bit of differences inside here. Okay, now remember what article are we supposed to look for? Technical fee, right? Technical services, right? Okay, look at this one here. There's only one word here that is technical, of which this is something to do with Article 12 of royalties. Royalties. So there is no article for fees on technical services in the DTA between Australia and Malaysia. Then how? Then how? Then how? Tax office say that, oh, since it's not spelled out clearly in the DTA, right, they will just tax based on Malaysian tax legislation. Tax lawyers say, no, you have signed an agreement with Australia, you didn't put the article inside there, which means, right, there's no intention for either parties to tax it. You can't tax it. Who won the case? Taxpayer on, okay? Taxpayer won the case. So eventually what happened is, what I'm trying to tell you is that, right, in the absence now, we have the DTA with Australia, but there was no article for technical fees inside there. Too bad, in that case, right, Malaysia Tax Authority cannot tax it. Okay, but what if, let's say, Malaysia and Australia has got no double taxation agreement at all, never signed a contract at all, then yes, it's up to Malaysia to do whatever they want. You get what I mean? But in this case here, too bad, they signed an agreement, but they didn't put in this article for the technical fee inside there. So that means, right, okay, when they drop the contract, they have consciously, okay, omitted this from the DTA agreement. In that case, right, which means this kind of technical fee should not be subjected to any withholding tax at all. Okay, that's the spirit behind this particular agreement here. Okay, so that's why if you look at here, the payment should be 100% to Nicholas. If Nicholas is actually a company in Australia, no withholding tax here. Okay, absence of article of fee for technical services in DTA between Malaysia and Australia. Understand or not? And in fact, 2 more countries left only without any article for technical fees. Australia is one of them. The other one, I can't remember exactly which one. I'm just telling you that, right, don't jump into the conclusion straight away. Look at the DTA first. If you have issue like this, check the DTA. Okay. I will tell you why DTA is very important, because some of the income has been specifically omitted in the DTA, or some of the income that doesn't look like income at all, right, but they put inside the article, inside the DTS, one special article, then too bad. Okay, so the taxing rights will be given to the tax authority to do to collect the taxes, the withholding tax. Okay, so this is another one more example. Okay, next. Now, so far are you guys okay for service income under Section 4 capital A? So now the same thing happened to, okay, what happened to the rental of movable property? I've not covered that in my lecture illustration. Never mind, it's okay. So what if, as I mentioned to you just now, okay, you went to London, you use a taxi over there, you pay the fare, taxi fare, right? Strictly speaking, you're supposed to collect, okay, you're supposed to collect that amount of money for the movable property, right? Let's look at the DTA. The DTA say 10%, you're supposed to deduct 10% by right. But can you do that or not? Better don't. If you want to come back alive, okay, you better do that. Very simple. Okay, and the worst thing is because I showed you the exemption order just now, right? The exemption order, okay, they have omitted rental of movable property inside that. Exemption will be granted if services rented outside Malaysia, but not the rental. So strictly speaking, you're supposed to do that, but I'm not going to ask you to do that. Okay, so forget it. That's what happened to rental of mobile property. Okay. Now we move on. So just now I mentioned the service income, right? The service income in the accounts. I forgot to mention this. In the accounts of okay, back to this one. I forgot to mention this. Now, in the accounts of Nicholas, right, the service fee received by Nicholas is a form of business income, correct or not? Supposed to be Section 4A business income in Malaysia, right? But in this case here, can the Malaysian tax authority tax it or not? Can the Malaysian authority tax it? That depends on whether the 4A service income is derived from or accrued in Malaysia or not. How do we know? Look at Section 12. Any business operation in Malaysia, they send someone there, come to Malaysia for 3 weeks. Would that be considered as business operation in Malaysia? Would that be considered as operation in Malaysia or place of business in Malaysia? Now remember, the engineers, okay, this one Nicholas sent 3 engineers to come to Malaysia 3 weeks here. Would that be considered as, Nicholas having a place of business or operation in Malaysia? Yes or no? No need to guess. Look at the legislation. Look at the double taxation agreement. Very simple. Anything you're not clear, look at this one. Okay, now the concept of place of business that I mentioned under Section 12, right? Okay, in the double taxation agreement, it is called permanent establishment, PE. Same thing. Actually, they are 98% the same. When we say place of business, right, basically we're referring to permanent establishment. Okay, if you look at section, this one here, I show you one. Now we look at Section 12. Why Section 12? Because in the accounts of Nicholas, right, the amount of income earned was supposed to be regarded as Section 4 small a income. So then we want to find out exactly whether the income must be derived from Malaysia or not, right? We look at Section 12. Because in the question or in the illustration, 3 engineers did come to Malaysia for 3 weeks. That becomes very dangerous already. They might have a business here. They might have a place of business or operation in Malaysia. So find out. Okay, look at Section 12. Okay, if you look at Section 12 here, this is the one. Okay, this is the main section, Section 12 here, derivation of business income in certain cases. This one have been added in, not too long ago, just a few years ago. They have added in this one. Subsection 3 and subsection 4 here. For the purpose of subsection 3, a place of business includes a place of management, all this nonsense, right? Then I show you the double taxation agreement. You will see a lot of similarity there. So what article are we supposed to look for? Article of permanent establishment. This is the one. Normally it's Article 5. Okay, this one. Permanent establishment. You see? Exactly the same. You see, the term permanent establishment shall include especially, okay, a place of management, blah, 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 all this nonsense, right? Look at this one here. For the purpose of a place of business shall include this one. Almost the same. Almost the same, as you can see from here. Almost the same. So that's why the term used in the double taxation agreement is permanent establishment, PE. In our law, it's called place of business. So I suspect tax office, when they amend Section 12, right, they control F, and then they control B. Yes, they control A, control F, control B. Control C, control C. Okay? Copy and paste, that's all. Okay? And then they change the words. Okay? They change the words. So that's why it's almost the same. Okay, so now look at this hint here. We want to know whether the 3 weeks stay in Malaysia, presence in Malaysia, right, will then cause Nicholas to have a place of business or permanent establishment in Malaysia or not. Look for this one. It's all here. Okay? The term, let me check. Okay, I already saw this. Okay, never mind. Look at the act first. The act says that this one is Section 12. For a purpose, this one, blah, 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 all the nonsense here. Never mind. Okay. Let me find this particular. This one here. And without prejudice to the generality of the foregoing, a person shall be deemed to have a place of business in Malaysia if that person carries on a supervisory activities in connection with building or work site here, or a construction and installation, or an exemplary project. Full stop. No more already. Okay. Now you look at the double taxation agreement. You will see the some similar things here. a building site or construction, installation, or assembly project which exists for more than 6 months. So that actually gives us the indication. Now, in our tax legislation section 12, right, they didn't mention the duration. Why? Because they know very well that they have signed hundreds of DTAs with so many countries, right? So different countries, different duration. Some 3 months, 6 months, 9 months. Okay, so therefore in our tax legislation under section 12, they didn't put in any duration there, as you can see from this particular article here. They just mentioned that it's installation, assembly project, but they never mentioned how long. Okay, they didn't put any duration over here. But if you look at double taxation agreement between Malaysia and France here, you see this very clear cut. Hang on, let me enlarge it a little bit. How to make it bigger? How to make it bigger? Touchscreen. So 6 months here. Okay, 6 months here. Then my question is back to this one. 3 weeks considered as place of business or permanent establishment in Malaysia or not? No. So therefore, cannot tax under for small a business income. That's simple. So, would they give up? No. Now they try section 4 capital A. 4 capital A. So 4 capital A, they find that, okay, inside we have a match there. So this one, it is taxed at, okay, flat rate of 10%. Meaning to say that Nicholas no need to come to Malaysia, the 10% collected by the LHDN from Ali Berhad, final. No more further tax. But what if Nicholas has got a place of business in Malaysia or permanent establishment? For example, if they set up an office over here to provide these management consultancy services for more than 6 months, let's say 7 months here, then what happened? Then the tax will be, okay, coming from section 4 small a business income, not for capital A anymore. That is exactly why I need to cover this one, called contract payment section 107 capital A. Okay, the withholding tax section here is 107 capital A. Income, we are referring to the 4 small a business income here. Okay, so this is slightly different. Why different? Because the tax, the withholding tax here is not a final tax here. So what is that? Okay, what is meant by non-final? WT or contract payment for services performed in Malaysia to non-resident services provider under section 107 capital A here. 10% of payment to non-resident service provider. Remember, must be service provider. Service contract only. Service contract only. I tried this question in final exam. I put in a scenario, supply of goods together with supply of services as well. So 2 different figures under 1 contract lump sum. Okay, students do not differentiate between provision of goods and also provision of services. Then what happens is lump sum subject to withholding tax, wrong. I just give across 0. My life is very easy when I market. You have to split that. The contract for supply of goods will not fall under any withholding tax. I already said that so many times. Only service contract will be subjected to withholding tax. So this one here, be very mindful. So it's 10% plus 3% here. 3% of payment for non-resident services, service providers here, employees tax liability in Malaysia. Okay, sounds very difficult to understand, right? Okay. Make your life easy. Illustration. Read this illustration carefully. I'll follow. Okay. I'll go through with you, then you understand. Okay. This one here we're talking about Ali Berhad secured a project from government to construct a bridge in Pahang. Engaged Nicholas, a technical consultant, right, to oversee the construction project for 8 months. First thing, more than 6 months already, isn't it? So in that case, right, okay, what happened? Nicholas sent a team of 3 engineers to oversee this project. Nicholas engineers recruited few staff here in Malaysia, salary paid by Nicholas to assist in the project. That means, right, they come to Malaysia here to set up some kind of a temporary office over here. And then Ali Berhad is required to pay technical service fee to Nicholas here. So here, this one is a service contract. But can tax office use, which section is our tax office supposed to use? Section 4 small a or 4 capital A here. So since operation is in Malaysia here, place of business Malaysia, right? So they're supposed to use 4 small a. Okay? And in that case, the tax rate, the withholding tax, why withholding tax? Because Nicholas is not a tax resident in Malaysia. Now, how to qualify as a tax resident in Malaysia? I will cover this later on. To become a tax resident in Malaysia under section 8, right? Nicholas needs to exercise control and management of business or affair in Malaysia. But in this case here, Nicholas just sent a team of engineers here to Malaysia. They won't exercise any major control or management of business and affair in Malaysia. They're just here to provide services, that's all. So, Nicholas tax status right in Malaysia is not a resident. Even though they have, now, remember, a permanent establishment does not mean that it's a tax resident. In this case here, temporary office set up here in Malaysia, more than 6 months, yes, they have a permanent establishment or place of business. That does not mean that Nicholas is a tax resident in Malaysia. Two different things. Section 8 is to cover tax resident status. In this case here, Section 12 and the DTA will cover permanent establishment. Two different things, so don't mix up. So in this case here, Nicholas is still a non-resident. So any payment by Ali to Nicholas, right, we have to take into consideration of, the withholding tax here. Now, according to what I mentioned here, not final tax, blah, 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 all this nonsense, right, very difficult to understand. Make it even easier for you to understand. This one, I put in the figures, make your life very easy. Simple. Look at this one here. Ali Berhad, resident company Malaysia. Nicholas, resident in France. So they sent employees over here, 3 engineers over here, and then set up a temporary office here for 8 months. And then what happened? Now the contract sum is, let's say 1 million, 1.0 million here. 1.0 million here. When Ali paid, now this one here, service income. And Nicholas, because they're operating in Malaysia for more than 6 months, they have a place of business in Malaysia. And therefore, they have earned this business income. The service income, the contract fee is the service income, right? As in 4 small a income. Need to pay tax or not? Yes. But Nicholas is a non-resident, right? So withholding tax under section 107 capital A comes into the picture. So how many percent? 10% plus 3%. So altogether, 13% will go to LHDN. So which means, right, Nicholas will get only 87% of the payment, 870,000. Are you guys following? 870,000 in the accounts of Nicholas. So the 130,000 will go to LHDN here. So there are 2 different taxes over there, right? Tax rates over there, right? 10 plus 3. Let me explain to you what happened to the 10%. Now the 10%, the 10% here, Nicholas, since Nicholas has a place of business in Malaysia, Nicholas is obliged to file tax return in Malaysia. That means, the 10 plus 3 is not final. What is final? Nicholas will still have to file a tax return over here, assuming that the contract value is 1 million. So Nicholas in Malaysia spent 400,000 expenses incurred, deductible expenses, in order to execute the contract here. They've recruited people over here, they've done the job, right? 400,000. Then Nicholas will have to file a tax return in Malaysia here. How much? Gross income 1 million minus deduction of 400,000. Adjusted income here 600,000. Assuming they didn't claim any CLA, just assume, I do not know the figure, right? So in that case, the statutory income, aggregate income, total income, let's say everything the same. 600,000 here. Tax rate for Nicholas as a non-resident company in Malaysia, 24%. 24%. So how much tax Nicholas is supposed to pay here? 144,000. 24 out of this one. 24% out of this one. 144,000. Up to this point, are you guys following? Are you guys following? So Nicholas will have to file income tax over here. Are you guys following? Yes, Okay, next thing is, now, in this case here, Ali Berhad has already helped Nicholas to pay tax in advance, isn't it? The withholding tax, 130,000. So the 10% is 100,000. This 100,000 will then become a tax credit in the accounts of Nicholas. That's why you see a minus here. So which means the balance of 44,000 Nicholas still have to pay. 100% already collected earlier on from the account. So the balance of 44,000 still have to pay by Nicholas. So Nicholas will still have to pay 44,000 of the balance of the tax right to the inland revenue. That's why you see here 44,000 paid from Nicholas to LHDA. Altogether, how much collected? 144. Sorry? Where is the 30K gone, right? Never mind. Later on, I'll tell you. Next slide. Don't worry. So we deal with the 10% first. We deal with the 10% first. Are you guys following so far? Are you guys following? Yes or no? Which part you are not following? Which part you have a problem? Sorry? The 3%. Nanti dulu. Don't worry. Take care of the 10% first. Yeah, the income earned by Nicholas is a 4A business income, subject to withholding tax. Why? Because it's a service income, 107 capital A, and the recipient is a non-resident. So the 10% is the tax credit. What about the 3% later on? Up to this one, the 10%, are you guys okay? Okay, up to this point, okay. Now let's look at the 3%. Okay, where on earth is the 3%? Because apparently Ali Ibrahim also helped Nicholas to pay another 30,000, right? So how comes Nicholas still have to top 44,000? Very simple. If you look at this item here, this 3%, this 3% is 3% of payment for non-resident service providers here, employees tax liability in Malaysia. What does that mean? Meaning to say that this is some kind of a deposit, some kind of a security fund. Okay, now, okay, let's move on to the second slide here. Bear in mind that Nicholas set up a sales office, a site office here in Malaysia. It's a permanent establishment. So here, 3 engineers from Nicholas plus the local employees as well, isn't it? Now my question to you would be, do you think the local employees together with the 3 engineers from Fronttrack, are they supposed to pay their employment income tax in Malaysia? The 3 engineers and also the local employees in Malaysia, are they supposed to pay tax on their salary income? Sorry, no. Why? Have you checked your section 13? Okay, employment income is section 4, small b, right? Employment income, right? Then the derivation of section 4, small b income is section 13. Okay, did section 13 mention that, right, only salary of tax resident in Malaysia will be subjected to employment? No. So the 3 employees, the 3 engineers from Fronttrack, they're working in Malaysia. Where exactly have they exercised their employment contract? So, do they have to pay tax? Do they have to pay tax? Section 13, you have learned this in your MTS. As long as exercise of the contract, the employment contract happened in Malaysia, subject to tax in Malaysia. They've done their work over here, they earn their salary over here. Yes, subject to tax in Malaysia. So the 3 engineers from France and also the local employees, they are all subject to tax for their employment income in Malaysia. So to ensure that now, on top of that, right, Nicholas as employer, do you think Nicholas will have to fulfill the monthly tax deduction requirement? That means when Nicholas, okay, pay their employees in Malaysia, right, the 3 engineers plus the local one, are they supposed to deduct a portion of the salary and help their employees to pay tax in Malaysia? Monthly tax deduction requirement, right? Yes. That is why the 3% will come into the picture. Okay, so if Nicholas is a good citizen, tax citizen, make sure that, okay, when they pay the salary to their employees here over here in Malaysia, they also help them to pay tax to LHDN based on the monthly tax deduction scheme. No, I just assume only. Don't ask me where do I get this 200,000 and this this 20,000 over here. I just assume that in total, Nicholas is supposed to pay 220,000 worth of salary, okay, to all the employees over here. But the employees will get 200,000 and the 20,000 here, right, assuming that, okay, the employees are supposed to pay tax for 20,000. So Nicholas will do this on behalf of the employees under the monthly tax deduction scheme. So Nicholas is a good tax citizen, okay, help the employees to pay tax here, collected the money and send this 20,000 to LHDN on time. No delay, no penalty, nothing. So if that happens, tax office run a check and notice that, oh, Nicholas have done your part as an employer and all the employees, they have settled their income tax here, employment income tax here in Malaysia, right? Good citizen, no problem. The 3% will be refunded back to Nicholas. Yes. So the 3% is like security fund, deposit collected, just to make sure that Nicholas done their job as employer and their employees pay their fair share of tax here with regard to their employment income. Are you guys following? So that's why it's paid class 3. So the 3% got nothing to do with the profit of Nicholas, just to force them to do their duty as an employer in Malaysia. Are you guys following? Okay, the rest of you, are you guys following? Okay, good. Next. Any more questions you want to ask me? So this is how it comes into the picture, the 10 plus 3. And that's why I say this one is not final. The 10% here is not final because it will become a credit. It's not final. The final tax liability of Nicholas in Malaysia, according to this simulation here, is 144,000. So the balance of 44,000 paid by declared separately. Are you guys following? Okay, good. Question? Anything you want to ask me? So that would be under contract payment. So it's a service contract payment. If it is a supply of goods, right, then it's a different story. So what happens if, let's say, Nicholas supply machine? At the same time, they send their engineers over here to set up a temporary office to help to install the machine and oversee the condition, the commissioning, the testing, everything, right, for 1 year here in Malaysia. Then you have to look at the contract very carefully. The contract comes with two different elements. One would be supply of the machine. How much is that? Subject to withholding tax or not? No, it's not a service contract. And then the other portion of the contract, provision of services to commission, to test the machine, and to carry out all these services in Malaysia for 1 year. Yes, that portion subject to withholding tax. Be very careful. I love this kind of trick in my final exam. You miss that one, your calculation all wrong, my life easy. Cross, zero. Thank you very much. Okay, don't make mistake like that, huh? I'm very good in all these tricks, one, I'm telling you. So don't get overly excited with the exam questions. Read carefully. It may look something like what you have done in your tutorial questions, but with that 2 words or 3 words change, right? If you don't read that carefully, that's it. Okay? Be very mindful with that. Okay, done. Okay, so now let me just so that's right. Okay, so now how do we know exactly whether it's a 4 small a contract, service contract income, or a 4 capital A service income? We look at the number of months services have been carried out in Malaysia, because according to our DTA, if the country involved is France, 6 months. I think Hong Kong, it's Hong Kong or Singapore is 3 months. Let me check. I can't remember exactly. Let me show you the difference here. It is Malaysia DTA, Malaysia Singapore DTA, Article 5. Let me see. Okay, yeah, Article 5. Where is that? Sorry, still 6 months. Okay, let me see anyone that is different. Hong Kong and Malaysia. 9 months. This is the one. 9 months. For Hong Kong, if they want, if they have some activities over here, right, must be more than 9 months. Then they will become a permanent establishment in Malaysia. 9 months. So different. It is different. So the next question would be, so in the exam, if I want to test you on this, then how? Don't worry. If I want to test you on this, I will give you extract of the double taxation agreement. Okay, so you will be given the information. I'm not asking you to memorize, 100 over countries, which one 9 months, one 6 months, no. Don't worry. All this will be given to you, don't worry. Okay, so this is a contract signed between Malaysia and Hong Kong. It's actually 9 months here. Okay, so it's different from France. France is 6 months. Okay. So depends on the negotiation, put it this way, between the two jurisdictions. Okay, question? So this one here, in fact, I've summarized for you. If it's 8 months, right? Okay, what happened? What will be the tax treatment? Exactly like what I mentioned just now. If it is 2 months, 2 months then you count the service income, then it will be taxed under Section 4, Capital A. Okay, 4 Capital A. Withholding tax is going to be a final tax, fixed rate. No more changes. That's all. Okay. If it's 8 months, then okay, then it becomes different. Okay. In fact, the withholding section is also different. 107 capital A, 109 capital B. Okay. And if we sign DTA, but the DTA has got no technical fee article, then too bad. Can't even tax it. That's simple. Are you guys following? Withholding tax is getting more and more important in Malaysia now, because we have signed this treaty for global minimum tax rate. In the future, what happens is some of these foreign multinational companies, right, they come to Malaysia, to enjoy the tax holidays over here. What is tax holiday? Now, in order to encourage a foreign direct investment to come to Malaysia to set up the factories, for example, right? Our government is actually very generous. They offer tax incentive like tax holidays for 12 years. Means, right, this entity, if they set up a factory over here, they make profit over here, 12 years, no tax, zero. This becomes a problem. Why? Because, okay, according to all these developed countries, they say not fair. The developing countries are competing with them to attract the foreign direct investment. So they will punish now. These foreign investors, right, let's say, okay, coming from Australia, for example, if they come to Malaysia and enjoy 0% of income tax over here, right, okay, their home country will tax them 15% minimum. So if you don't collect the tax, the home country will collect that on behalf of us, but they're not going to remit the money to us. Why? Because they say not fair. No, developing countries all play cheating, give 0% tax, zero tax, right, to attract all this foreign direct investment to come to our country. Who created all this nonsense? They created. Now they develop already. They say that we are not fair. Okay, never mind. It's okay. So what happens now in the future, right? All this withholding tax, all these things will come into the picture. Why? Because we have to fulfill minimum 15%. Everybody come here, you have to pay 15%. So that's why withholding tax will have to come into the picture. We have to withhold and make sure that 15% tax. Are you guys following? So in the future, I think this particular area is getting more and more important. Okay, done. Okay, then let me move on to, I've covered all this. Okay, this one here, this one I like. This is a new trick, just announced, it's not announced, but as I said, tax office actually failed to use this 4F, right? Okay, so let me just cover exactly what the 4F. 4F is actually gains or profits not falling under any of the foregoing paragraphs here. So that means, etc., etc., etc. So the tax office want to use this payment received by a non-resident coming from Malaysia, which does not fall under Section 4 and also 4 capital A here. Now IRB insists that such sums should be taxed under Section 4 small f income here. They say that. Can we ask this many times already to the tax office? They say, no, we will tax them under 4F here. Okay, so we have to challenge that. You know why not? Very simple, as I said, the spirit of income tax here, it must be as clear-cut as possible. Cannot tax under etc., etc. Okay, legally possible provided if non-resident pay is residing in a country jurisdiction which has signed a DTA Malaysia with this is the one article of other income. Now this is the new trick now. Unless there's other income article in our DTA, for example, Article 22 in the Malaysia-China DTA, or income not expressively mentioned. Very barbaric. Not expressly mentioned also, they will whack you. So if they have this article, like for example the one with Canada, so Canada is pretty barbaric, like it or not. Okay. So now give me this example. This is a very good one. Alan, a Singapore tax resident, is a friend of Charles, owner of a factory in Malaysia. One day, Alan introduced his friend, Danny, Singaporean, to Charles. Danny became a customer of Charles eventually. So to express his gratitude, Charles then gave an ang pao. International student, ang pao means cash gifts. How many international students do I have here? Raise your hand. Please raise your hand. Okay. Okay. So I use some local jargons. If you have problem to understand, right, ask your friends around. Okay, no problem. Ang pao means is actually a cash gift during Chinese New Year when we celebrate Chinese New Year and give our friends or relatives ang pao here. Okay. To Alan during Chinese New Year, CNY is Chinese New Year. Because they're all Chinese, okay? Is the money received by Alan subject to income tax in Malaysia or not? Okay, now here Charles is a resident, Alan is a non-resident. Okay, Singapore tax resident, isn't it? So Charles give an ang pao to Alan. Yep, cash gift to Alan. Why? Because Alan introduced a very good customer to Charles. Question is, can IRB tax on it or not? So according to IRB, okay, the latest declaration, they said 4F income, etc., etc., etc. Because if you look at A, B, C, D, E, right, nothing mentioned that. So they use 4F. They say we want to tax it. Okay, can they do that or not? Money received in Malaysia is slightly a commission, we call it. But okay, if Alan is actually a commission agent to help Charles to look for customer, then yes, this is actually commission. Okay, but question never say that, right? Just a friend, just introduce a friend, just get a big ang pao, that's all. So therefore, they say that tax office say not under 4A to 4E, right? They will tax it under 4F. F. That's exactly what they say. Okay, and the P is non-resident, so withholding tax will come into the picture. Is that true? Now, if you look at, is there any article of other income or income not expressively mentioned between Singapore and Malaysia DTA? I've already checked many times, no, it's not inside there. So in that case, right, even if they want to use 4F to tax, right, also cannot, unless Alan is a Chinese resident, Chinese citizen. Okay, China, coming from China, then it's a different story, because yes, we do have that particular article in the DTA between Malaysia and China. So in this case here, right, no. In fact, I will question, right, okay, whether this particular cash gift, right, is income in nature. Is that income in nature? I do not know, because Alan just introduced a friend, that's all. It's not income in nature. This is very scary to me, because if this becomes a case, right, so next time when you receive your ang pao from your parents, you better make sure you pay your income tax, becomes an issue, isn't it? It's a cash gift. So I don't even think that this is actually income in nature. It's just a gift. When it's a gift, right, it's not within income tax. Unless Alan is an agent, okay, helping Charles to look for customer. That is a different story. Okay, so that would be the latest trick, as I said. Okay, so then I'm done. Now I will go through some examples that I already mentioned to you just now, right? Difference between permanent establishment and also, okay, tax resident here. I said this to you. I said when we have permanent establishment or place of business here, does not mean that, okay, this particular entity is also having a tax resident status in Malaysia, like this case here. Back to this one, okay. So Nicholas set up a side office over here in Malaysia for 8 months. So they have a permanent establishment here in Malaysia. Does that mean that Nicholas is also a tax resident in Malaysia? The answer is no. Unless Nicholas, okay, the managers over here in Malaysia, right, can exercise full control and management of the business and affair here in Malaysia. Like, they are so powerful, they can make major decisions. So I'll give you the indications here under section, okay, section 8 and section 12 here. You can see their difference. Because place of business is very straightforward, very easy. If there's a place of business, place of management, a branch, office, factory, all this, right? If they are here for more than a certain number of months, yes, place of business will be. But in order to become a resident, right, section 8.1b, management and control of business, or section 8.1c, management and control of affairs. Either one. So what would be the indicators? Okay, management and control of business, section 8.1b here says it, right? Major decisions, investment decisions made by directors in Malaysia. But the 3 engineers are here to do work. They're not here to make this kind of decisions. So I don't think so. Okay, and also this one, management and control of affairs. Okay, now this one, this is very straightforward. Okay, the benchmark we use is normally, we use the place of meeting. Okay, the strategic decision making, what do you call that, meeting, right? Like for example, board meeting in Malaysia, which means, let's say a Singaporean company, they're operating in Singapore. Okay, what happened is, because the directors love durian so much, they cross over to Malaysia to have their board meetings 3 years, okay, 3 times a year, okay? So they make major decisions in a hotel located in Johor. After that, they go for their durian, okay? So in that case, right, too bad, the Singaporean company will then become a tax resident in Malaysia. But does that mean that they have to pay tax in Malaysia? You get what I mean? Let me just recap. Directors of a Singapore company come to Malaysia, rented a hotel, office, okay, or not office, what do you call it? A meeting room in a hotel, in order to have their board of directors meeting 3 times a year. After that, they go for their durian. They make major decisions here in Malaysia. So they will actually become, because of that, right, the directors are having their board of directors meeting over here, right, the company will then become a tax resident in Malaysia. But the question is, in that case, okay, the income they earn in Singapore, are they supposed to pay tax in Malaysia or not? The answer is no. No, tax residency and tax accessibility, 2 different things. Don't mix up, because I noticed a lot of the seniors say that, oh, it's a tax resident, so pay tax in Malaysia. But if you don't have any income in Malaysia, then how? Whether you pay tax in Malaysia or not, okay, it is not depending on whether you are tax resident or not tax resident. It depends on whether you earn or you didn't earn income in Malaysia. Okay, if you earn income and you happen to be a tax resident, congratulations, you get better tax rate. Okay, if you're non-resident, too bad, you pay 28% as an individual. No benefits, no reliefs, nothing. Okay, so that's the difference. Be very mindful with that. Okay, so with that, I will just run through with you some examples. I won't go through everything, just some here. This one, I think I've already gone through with you, so I don't want to go through again. I just choose one that is actually a very obvious one. I always like to use the warehouse because warehouse is actually a problem. This is the one. Let me see whether this is the best one. This one already covered. This is the one. Okay. Example 4. Okay, this is a very good one because a lot of big organizations, they are using this trick in European countries. Like for example, Amazon. Yes. Okay, it's the way they say that it's a tax planning scheme, but UK government say that it's a tax avoidance scheme. Very straightforward. Now, what happened to this one here? In fact, this one is actually becoming more and more popular now because we have got a lot of all this platform that you can sell your products over the internet, like Tmall, Taobao, Lazada, all this, right? Now, this would be the problem here. An Australian company set up a warehouse in KL to store all stock in trade acquired from contracted Malaysian suppliers. So here we have got this Australian company set up a warehouse here in Malaysia. I think I start with this one first. With 2, then with 4. Let me check first which one is actually easier for me to explain to you. I think 2 is better. Okay, I think I start with 2 and 4. Okay, ABC Private Limited Company, Australian company, set up a delivery office in Malaysia, just deliver goods only. This office is authorized to handle all after-sales services like minor repair, change of defective goods, and handle complaints and dispute resolution. Goods are made in Australia and sales are transacted online and processed in Australia. So what does that mean? So the Malaysian customers, right, if they want to place order, they have to go to the internet. All these orders and payment will be processed back in Australia, and then the delivery office here will receive an email saying that, okay, we have got customers make order. So therefore, the delivery office will actually send the goods. Delivery office in Malaysia keeps sufficient stocks for domestic market. Okay, so discuss the tax implication here. Now, in terms of place of business, yes, we have that because they have a warehouse over here. If you look at here, okay, you will see indication here. They have got, workshop, they have got what you call that branch office and all these things, right? Okay, place for them to do storage. Okay, one of the indicators there. Okay, so it will become a permanent establishment in Malaysia and after-sales services as well. They also provide after-sales services as well. Keep stock to serve domestic market. Mere stock keeping does not constitute place of it. If it's just stock keeping only, right? No delivery, nothing, just keep that. No, it's not a permanent establishment, but too bad they deal with the customers and also they help to deliver. When they help to deliver means, right, it becomes a fulfillment center. Okay, Amazon case. So it is actually a permanent establishment there. Tax resident, management and control of both business and affairs not happen in just a warehouse. Okay, just a delivery office here. So why this is a problem in Amazon case? Why this is a problem in Amazon case? Okay, what happened here? Amazon, they sell through the internet, isn't it? So in UK, they have many warehouses to stock up. Okay, but the UK customer, when they place their order to buy from Amazon, right, to use their platform to buy things, right, these orders and also the payment will go to Amazon Luxembourg. Luxembourg, just a country very close to UK. Okay, I think Central European, if I'm not mistaken, right? Okay, it was sweet, very small country there. Very small country there, but they are very rich. Why? They're doing all the illegal things. Sorry. So what happened is that, right? So Amazon set up a company, a subsidiary in Luxembourg for them to process all the payment and also the orders coming from UK customer. And after that, the Luxembourg sales officer will then inform, okay, the warehouse located in UK to deliver the goods using Royal Mail of UK. Okay, the courier service in UK to deliver the goods directly to the customer. Within hours, customer will receive their goods. Then the best part, when it comes to tax filing, right? Amazon say, oh, we have not earned any income in UK. Why? Because all the sales invoices, all the payment has been processed in Luxembourg. And therefore, again, revenue should be captured in Luxembourg. Luxembourg is a tax haven. Tax haven means what? 0 to 3% tax there. So they are moving all their revenue to Luxembourg. Then the argument is that, right? Now the warehouse we call it fulfillment center in UK, right? Just to help you deliver the goods, they didn't process any sales, they did not accept any orders, nothing. Yes, that's exactly what happened. That's why it becomes a case there. And this is actually very rampant now. A lot of big organizations are doing that. Okay, so eventually the tax office of UK, they're not very happy with that. So they changed the law and they whack them with VAT. Value added tax is a bit like GST here in Malaysia. Because why? Because services and goods are also consumed in UK. The goods will be used in UK, so therefore they use VAT to whack them. So in Malaysia, we have the similar problem as well. Because I noticed that, right, if I'm not mistaken, you know this company called China or not? Anyone that you bought your Yes, they have in Malaysia already. So they stock up here. Okay, so when they deliver the goods from the warehouse close to KLIA, right? I don't think so they pay any income tax in Malaysia. So that becomes an issue. Okay, so in the future, but too bad Malaysia, we have to beg them to come to Malaysia and invest here, right? So just keep quiet. Don't say anything. Just forget it. Why? Because they create jobs actually. They come to Malaysia, they teach us how to run a warehouse properly, they put in the investment and also the technology over here. And then they make delivery in this part of the region right much more faster. So it's okay lah. Yeah, just swallow that, no problem. In fact, we should give them tax incentive, right? No problem. But in UK cannot. UK because they're a developed country, right? Okay, cannot. Okay, for them it's actually a big issue there. Okay, so this becomes an issue. Okay, but in Malaysia, different story. Okay, so now understand now the difference. It's a place of business, but it's not a tax resident because there's no sign, management and control of business and affair exercise in Malaysia here. So two different stages here. Now back to example number 4. Okay, so this company here, an Australian company set up a warehouse in KL to store all stock in trade acquired from contracted Malaysian suppliers. This one slightly more complicated. So the Australian company come to Malaysia, set up a warehouse here. So the warehouse, right, will stock up all the goods, right, purchased from local suppliers, Malaysian suppliers. The warehouse manager is responsible for procurement of, is responsible for procurement and view, not of, and. Okay, and we reorder the stocks when they are running low. So meaning to say that the Australian company set up a warehouse over here. They have got this warehouse manager. Okay, they will buy goods from local suppliers. They are trading company buy goods from local suppliers over here. Then what else? Okay, all sales transactions with Malaysian customers are processed in Australia via B2B online portal. So again, it's the online thing. Okay, online is actually a big trouble now. And the KL warehouse will deliver goods when instruction is received from HQ in Australia. All major management decisions in respect of this warehouse must be made in Australia. Is the warehouse a PE in Malaysia or tax resident in Malaysia? Okay, so let's look at this one here. Now, if you look at this one here, yes, we have this squarely. Okay, according to the double taxation agreement between Malaysia and Australia, right, we see this. Okay? Regularly purchase and maintain stock in trade. Mere purchasing or storage is not PE. If it's only purchasing, but no storage, or storage, no purchasing, cannot. Okay, but if both happen in Malaysia, right, too bad. According to the DTA between Malaysia and Australia. But are they resident in Malaysia? No. So that's why, right, okay, in that case, what I'm trying to say here, now, if this happened in Malaysia, right, tax office can still tax, okay, whatever income made from a Malaysian customer here, even though all the orders have been processed in Australia. Why? Because they have got a warehouse which will qualify as a permanent establishment in Malaysia. So there's one way we make sure that these business entities pay their fair share of tax in Malaysia. Okay? So that's why I say China will become an issue eventually. Something like this one. Okay? That becomes an issue. Are you guys following? Okay, so these taxpayers are getting more and more advanced, more and more sophisticated, put it this way, by using the internet to help them do all this crime. Well, crime now, tax planning again, but tax office will say there's tax avoidance. I mean, to be fair, if this warehouse is located in Malaysia, they are going to use the road public transport system and also the roads built by the Malaysian government in order to move their goods, isn't it? Pay tax lah. Correct or not? The warehouse, okay, the warehouse, have a nice tarmac road, right, all the way connected to the highway, and then it's very easy to send goods to the customers, right? Please pay their fair share of tax. Please pay their fair share of tax. In fact, I'm not so sure whether you are aware of this. If you buy from, for example, Tmall, and also Shopee and things like that, right? And also another one, this one is Shein. What else? All these portals, right? If they charge you delivery charges, right? Delivery charges come with service tax. Yes, come with service tax now. Okay? And at one point, if you bought from, for example, Tmall, if the purchase is actually lower than 500 ringgit, right? No tax, now got tax also. Sales tax, 10% or more. Fair lah, come on, okay? Correct or not? Not fair. One fine day you become a minister, you say it's fair. I think it's fair lah. It's fair. Why? Because these business entities, right, they didn't pay tax in Malaysia. They're located in China. They didn't pay a single cent of tax here in Malaysia. And then when the goods arrive into Malaysia, custom will help them to actually clear the goods. Custom salary need to pay. Correct or not? And then the moment the goods out of custom already sent to the warehouse, the road. Okay? First of all, airport. Who built the airport? We. Taxpayers, right? Okay? They use the airport to send the goods over here to Malaysia. Hey, who need to pay? Have to pay, right? So sales tax must be there to be fair. And also the roads, the infrastructure they use to send the goods to your doorstep. All built by taxpayers' money, isn't it? Collect tax from the business entity, please. I think it's fair. Okay? So change your mindset a little bit, don't be so unfair. I love my country, so I pay tax. Tweet. Okay, I think I'm done with this one. The rest you can read is a very similar example, very straightforward, but I gave you all this discussion points nicely already. Okay, let's move on. I can't really see you today, unfortunately. I have uploaded week 4 lecture. Someone said you want to complain, you want to move back to JC Hall or something like that, right? Did you actually send an email? Did you guys send an email? Tell them that you want a nice hall, JC 2 or something like that, right? This place is really bad. It's like, minibus like that. Right? I don't know, up to you. Because if I complain, right, they're not going to entertain me. If all of you send them a nasty email telling them that it will change, right? Okay, that one, I'm happy, right? Okay, by the way, tomorrow, I think tomorrow 11 o'clock class, right? I think we have a change of venue just next door only. Remember last week I swapped my class with Mr. Wong? Yeah, Mr. Wong. So, okay, what class is that? Tutorial, which group? Tutorial 5, okay, your venue is next door. Next door, just next door. I swapped my class with Mr. Wong. Okay, I already uploaded lecture 4 slide. So, I know you hate me, but no choice. Never mind, I just cover one entity only. Very fast one, okay? Yep. 5 minutes break, okay, okay. Yes, you see.